All right, everybody. Welcome back to Strongman Personal Finance. Today, we're going to talk about everybody's favorite subject in the whole wide world, budgeting, the basics. Why budget? What's the point? Let me tell you. Number one, budgeting is the foundation of your financial plan. You cannot create a financial plan without first developing your personal budget. What does the budget do? It helps you understand your monthly cash flow. What is cash flow? Basically, it's cash coming in and cash going out. What does the budget also do? Helps you identify expenses in your budget that can be reduced. And let me tell you, we're going to find a lot of expenses to reduce for you, buddy boy. And finally, it helps you eliminate spending anxiety. If you want to go buy something, you may be nervous because you don't have that much money. Well, if you have a budget, you actually know exactly how much money you have to spend on whatever item you want to buy, reducing your anxiety. All right, what is a budgeting process? Here I've got a 6-step plan to actually create your budget, which we'll hit on the next slide. So I'm not going to read this. I'll give you a second to read it. All right, moving on. Number one, step one, you need to gather the materials to build your budget. Now, I prefer to use Microsoft Excel to develop my budget. And the reason being is because if something changes, I can just open up the file, I can change the numbers around, and voila, it's done. You don't have to do that. You can use pen, piece of paper, or an online budgeting tool, but I would recommend you use Microsoft Excel. And I'll actually, if I'm feeling like it, develop a Microsoft Excel tool for you. All right, so you need to get Microsoft Excel, pen, paper, whatever. You also need to gather your pay stubs. Now, the reason I say that is there's actually a lot of people out there that don't know how much they actually get paid. They don't even check their bank account. So, in order to know how much you actually make, how much actually goes in your checking account every month, you need to get your pay stubs. And we'll talk about that in a bit. You also need to gather your bank statements. Now, you may think you have a good grasp of how much you're spending and receiving every month with your cash flows, but let me tell you, most people actually don't. The best thing to do is actually print off your bank statements or pull them up on the computer and actually analyze what you're spending your money on and where your income is coming from. On top of that, gather your credit card statements. All right, a lot of people put their expenses on their credit card and then they pay it off, either the minimum or the full amount. If you are one of the people that do that and have a credit card, you need to gather your credit card statements. And then finally, you need to get last year's tax return. Now, the reason I say that is a lot of people, they actually get a refund every year. It could be through tax credits, or it could be because you're just paying too much to the federal government or to your state government. And if you identify that you have a big tax return, you can actually, adjust some of your withholdings so that you're actually paid what you should be paid instead of waiting for a refund at the end of the year. All right, moving on to step two. You need to categorize, summarize your monthly income. Now, there's two types of classifications that you would say of income. You have net income, and then you have gross income. What is your gross income? That's your salary. That's on your offer letter on your job, for example. Let's say I make 70K a year. That's your gross income. That's before any deductions for taxes, health insurance, whatever. Now, your net income is the net or remaining amount of income that you receive after all of your deductions that come out of your paycheck. There's all sorts of taxes and other things that come out of your paycheck. For example, I have federal taxes, state taxes, Social Security, Medicare, those are called FICA taxes, my health insurance, my life insurance, my retirement contributions, all that comes out of my gross income. And what I actually get paid is my net income. That's the remaining amount of money that you have after all your deductions. Little note here though, if you're a 1099 worker, you're self-employed, you're not going to have anybody withholding your taxes or your Social Security contributions for you. You're actually going to have to set money aside and pay the federal government quarterly. And you better pay the correct amount or close to the correct amount, or you might get a nice little fine from the dear, wonderful IRS. All right, another thing to consider, how often are you paid? Now, people are paid in all sorts of different ways. You got biweekly workers who they get paid literally every 2 weeks. Every 2 weeks, a check's hitting your account. There's semi-monthly, which is twice a month. Monthly, don't see that much, but some people choose to get paid monthly. And then you have commission workers that work on commission that can be paid at random times. I know when I was a financial advisor, I would just have money randomly deposited into my account after I sold an insurance policy. So it was at times it was a little bit more difficult to budget, but that's a previous part of my life. And then finally, what days of the month are you paid? Now, this is important because you actually need to know the timing of when you're getting paid. For example, let's say all your bills come out on the 10th, but you don't get paid till the 11th. Well, you might have a little problem there because you got to pay all your bills before there's even money in your account. So the timing is very important. All right, step number 3, summarize your monthly expenses. Now, everybody's got bills. You got to pay your bills to survive unless you're, living with mommy and daddy, and then I guess mommy and daddy just support you. But in general, most people have bills, and there's many different categorizations of bills. How I like to divide it is bills that are fixed and bills that are variable. So what is a fixed bill? Well, every month you're either going to pay your mortgage payment or you're going to pay rent. All right, and every month it's going to be the same. X amount every month for the remaining 15, 30 years of your mortgage. It's always going to be the same. You got your car bill, you got your car payment or your lease payment if you choose to lease a car. Insurance premiums, daycare, loan payments. Think of these as bills that are exactly the same every single month. You can change how much you pay, but you can't really do that in the short term. That's more of a long-term thing that you have to do. What are variable bills? Those are bills that fluctuate from month to month depending on your activities. For example, let's say one month you go out to eat one time, spend $50. Next month, you spend $150 going out to eat 3 times. That's a variable bill. Changes from month to month. And you can see all the other examples I have here. Now moving on from that, you have essential bills and you have not essential bills. Now essential bills are bills that you can't live without. These bills have to be paid every single month. For example, if you don't pay your mortgage, bank's coming to get your house and you're on the street. You're done. You got to buy food. You got to feed your little tummy every month. Those are all essential bills, essential expenses that you have to pay every month to survive. Now, I'm not talking about makeup. Like, oh my God, if I don't have makeup, I'm going to die. That is not an essential bill. You will not die if you don't have your makeup, missy. All right, moving on. Step 4, determine your unallocated monthly cash flow. All right, what is this? All you got to do is take your monthly income, how much is actually going into your bank account, and then you subtract out your expenses. All right, and whatever you have left over is your unallocated income. Now keep in mind, if you do that and the number is negative, well, congratulations, you're spending more than you are making, excuse me. All right, luckily or hopefully, your income is positive. Your unallocated income is positive. And if it is, that's going to be the foundation of your financial plan that we're going to start building. All right, you're going to use that money to start achieving your financial goals, short, intermediate, long term. We talked about that in the last video. All right, so there's some short-term tweaks that we can do to your expenses, and there's some long-term tweaks. Short-term fixes, basically non-essential bills. How much you spend on lipstick, how much you spend on going out to eat, how much you spend on subscriptions. Those can be changed immediately. You can modify your budget to get rid of those bills immediately. Long-term tweaks, those are expenses that are more fixed in nature, such as your loan payment, your mortgage, etc., etc., etc. Those bills, you can change them, but you're going to have to take action over the long term to change those, such as refinancing your mortgage or paying off your loan, something like that. So think of short-term tweaks as non-essential and long-term tweaks to your expenses as essential. All right, step 5, keep a written copy. You need to have a written copy of your budget. Now, I know we live in 2020 and most stuff is digital now, but when you're first starting off, you need to actually print off your budget and put it on your refrigerator or wherever you're going to have access to that budget at all times. The reason being is that you need to see your budget and memorize it. You need to know exactly how much is allocated to each expense in your budget. All right. And if you need to change your budget, let's say you get a pay raise, you need to go ahead and print that new budget off. You need to go in your Excel file, which I recommend you use, and print it off. And step 6, you need to keep track of your progress. Now, if you don't actually track your budget, if you just create it and then you put it in the fridge and then you just stop looking at it, it's useless. You need to actually compare your budget to what you're spending in the months going forward. Now, when you're first getting started, I say you do it weekly. You can do bi-weekly, whatever you think works for you. But you need to at least update your budget on a monthly basis. And that's to make sure that you're actually following your budget. All right, so where do we go from here? In the future, we're going to determine what we're going to do with your unallocated income. Now, just keep in mind that financial planning is a personalized process, right? Everybody's financial plan is different because everybody has different goals. Some people want to go and, backpack Europe for a year. Some people just want to save up for a down payment. Some people just want to buy a nice new car, all right? Every personal financial plan is different. So if you have unallocated income and somebody just says, go buy stocks, bro, just go invest it. That's all you have to do. That's not a financial plan, and that may not apply in your circumstances. All right? Well, I hope you enjoyed this video, and I will see you tomorrow. Have a wonderful day.